Shrapnel, and I had some people ask me if I can make a video on investing in stocks. So I've been trading a lot lately and posting like my trades and stuff on Twitter, and that sparked some interest of some people and interested in how to do it. And first, I would like to say that there's a difference between investing and trading, where investing is buying a stock and holding it long term for like years. And then, I mean, it could be you can invest in a stock for shorter term than that, but generally you want to hold it for over a year at least, is what I think of investing. And trading is buying and selling them real quick in a shorter term than a year for sure. But there's day trading and there's swing trading. So day trading is buying and selling a stock within like the same day, and swing trading is like buying the swings up and down of a stock as it moves higher and lower, so that you could be in and out of a stock in a day or two, or up to like a couple weeks. You're just following the trends of the stock. So investing is something you should be doing, and you should do it as soon as you possibly can, especially your 401k. You should, I forget how old you had to be, maybe like 20, 19, I don't know when you can start investing in your 401k. I remember there being an age limit when I was working, and like I was too young to start investing in my 401k at the time. But as soon as I was able to start investing in a 401k, I did. And you should at least put enough of your money in a 401k as what your company will match. So like my company matches 6%. So you should at least put 6% of your pay into a 401k, because when you put in 6%, your company will give you 6% and put it in your account, and that's just free money. So if you don't put in 6%, you're basically throwing that money away, because it's going to be doubled. And some companies will match up to 50% of whatever you put in. That is really great. So you should really put in as much as you possibly can, because that's all free money. If the company that you work for wants to give you money to put money in a 401k, take their money. So that's really important. And the earlier you start investing, the more it's going to earn over time, because compounding interest, like you put $1,000 in and it earns 10% interest. So now you have $1,100 that's going to earn 10% interest, and it just exponentially grows as it compounds and gets. You could be a millionaire by the time you retire if you just start investing early. So that's really important, especially 401k. So once you're doing the 401k, then money after that you should really use to pay off your debts, like credit cards. If you have credit card debts with like 10 to 20% interest rates, you shouldn't even think about trading stocks or doing any other investing besides your 401k up to the company match, because it's really hard to earn like 20% earnings trading stocks to be able to, and you'd have to make more than that. Like you'd have to make more than whatever your credit card debt is to be able to outperform what they're going to be taking away from you from those debts. So pay your debts off. That's what I did. Pay the credit card debts off. I paid my car off, paid my house off. I paid all my debts off. And I know that that's really hard to do. Like I refinanced my house to a 10-year loan, and then like any extra money I had, I was like putting down onto the principal of the house until I paid my house off. So I was living with barely any money at the times. Like any extra money I had, I would just pay my house off. So no house payment. And that once you're debt free, then you can take some extra money and do some trading with it. So where I first started trading Well, I would say where I first started was in Vanguard. I got a Vanguard account, and then I was just buying and selling some different ETFs of some different market sectors, like mostly technology stocks. So, an ETF is an exchange traded fund, and like these will track different sectors of the market. So, I was buying technology, but you can do like healthcare, financial market, real estate, utilities, energy market. So at the time, I was interested in investing in the technology market. And so this FTech was had a cheaper expense ratio than Vanguard. So I came over to Fidelity. Pardon me. So I was trading FTech, and I really only started doing this like about a year ago. And I rode this wave of FTech up, and it went from like $50 to about $60. And I got out somewhere in September. And then all this crap started happening. The market started going down, and I started looking at different areas to trade in. And I started trading in natural gas, and in this one in particular, UGAS, which is a 3 times long ETN. So this will track 3 times the performance of this natural gas stock, which is UNG, United States Natural Gas Fund. So you see it went up 5.4%, and UGAS went up 16.8%. So 3 times what that underlying stock does, roughly. And these move fast. So I would not recommend this being your first trade, because this you can make a lot of money, and you can also lose a lot of money. And then so if you're betting on natural gas to go up, you would buy UGAS, and if you bet it on it go down, it says DGAS. So you see it went down 16.85%. So these things is what I got interested in. That's what I've been trading. Like, and there's different ones too, but all these different 3 times ETFs. I have them listed here somewhere. So here, like, these are 3 times bull, and bull means you think they're going to go up. And then there's like 3 times bear, and that's when you think it's going to go down. And there's all these different sectors. There may be even more than this. These are some of the ones that I look at, and usually I'll just look at what is moving the most. So you can see this one's moving negative 14%. So then I'd look at the bull of that one, which is UGAS, and that's the one that moved up the most. So I'll kind of look at these and just see what's moving the most. And Fidelity, my Fidelity account, I used to like find a stock or research a stock. They got a lot of good tools and things on here. So like, let's look at like Ford, and you just get an overview of the company. See, they got some good charts. You can pop out an advanced chart. And just get a lot of detail on it. And news articles, everything related to the stock, company profile. And they'll have like analysis. There's the earnings. Here's some analysis down here. They say it's undervalued, has strong outlook for the short term and midterm. And even go down farther, they'll link like stock twits, what people are saying about it. So I think it's a great platform for researching and learning about a company or a stock that you're interested in investing in, just to see what people are saying about it, what news articles are going on, and analysis, and what some of the experts are saying about the stock before you jump in. And then when you decide that you do want to invest in it, then you have to start looking at more of the technicals of where a stock is at. So like here, if we bring up Ford, and this is tradingview.com. This is what I like to use to see how a stock is moving. And I added some of these extra things in here. This is the volume. So the green bars are when people are buying it, and the red bars are when people are selling it. So you can see like a lot of buying right here. So volume can give you a signal of it's a good time to get into a stock. And also this is the RSI indicator down here that I added on. And that's the relative strength index, I think. RSI. RSI stock. Yeah, relative strength index. So a technical indicator used in analysis of financial markets. It's intended to chart the current and historical strength or weakness of a stock or market based on the closing prices of a recent trading period. So I use that to help me with when to buy into a stock. So this line that it creates here, this is the 70% line, and this is the 30 line. I don't know if it's a percent, 70 and 30, but when it's above that, it's usually indicating that it's overbought. So you can expect that when it goes up above this line, that it tends to sell off. So, and when it goes below that line, it's undersold, and you can expect it to go up. So if you were watching this trend and you see it dip below this line right here, and then not long after, this is how long of a time is that? It was like within like an hour, it shot up this big spike. And then once that shot up, then the relative strength index went above that line. So now it shows it's overbought, and then you see it pull back. So that's one indicator. So I try to only buy when the RSI is below the 30 level. And also, I mean, there's other trends, there's patterns. I don't want to go into every single pattern of trading. You can look up on a lot of this stuff that I learned was on YouTube, just searching YouTube videos, and a lot of people will go in depth. And I don't have any particular people that I recommend, but if you just search, like reading trading charts or learning technical patterns on stock charts, things like that, and you'll get people that can help you out. So this is one tool. So my main thing I'm doing is just giving you an overview of the different tools that I use. So TradingView is one, and then you could add all these different stocks to a watch list over here. And so that's like some of the ones that I'll just take a look at throughout the day. Just kind of have a quick look at the percentage that they're going up and down. And I don't do any trading on here. This is just what I use for charts. I like their charts. So nowadays I'm trading on Robinhood. And this past week I made $7,678 trading. And I was trading natural gas and oil. And those stocks are the UGAS one here that I mentioned. This other one, UWT, this one tracks crude oil, 3 times the performance. Oil U, Gush. I made a good amount of money on Gush. So that's what I was investing in this week. But I wouldn't recommend starting out on those. Start out on some less volatile stocks that don't move so fast, because you can fall off a cliff. And I will show you here. Since I funded my Robinhood account, I did have I put a little money back a long time ago, but never did anything with it until like December. And I held that UGAS over the weekend, and when it came back, it just fell off a cliff. So I lost like 20% over a weekend. So I came back on a Monday, and I'm down $11,000, and that was rough. So that was not cool at all. So I've been climbing out of that hole from that trade, and even as far as it went up, I still wouldn't have been out of the hole if I held it. So that's how far down in the hole it went. Even with it going up 14%, I would still not be out of the hole. I think my average expense or average cost of my shares was like $48.99, maybe something like that. So I had to take that loss. I sold out of it and went and earned it back in other places, because for a while it was just not doing anything. Right here, if you look at this, had it like right here, and then it dipped, and then I averaged down on it. So I bought more of it, because I might have bought it like at 57, and it fell off a cliff, and then it just didn't do anything for quite a long time. So I just sold it and tried to get that money back elsewhere. So Robinhood is what I use to trade right now, and the main reason is because they don't charge for trades. So on Fidelity, you can buy and sell their ETFs. Like all of these are no trading fees, and they also have some iShares ETFs that are commission free, no commissions. But anything else that I wanted to trade on Fidelity, they would charge $4.95, and that's pretty typical with most brokerages. They'll charge $4.95 every time you buy or sell a stock. But Robinhood changed the game, and they don't charge you anything. So the way they make money is through like options accounts, and I think they have some stuff like Robinhood Gold, where they'll like loan you money. So they'll make money on money that they loan you, but your own money you could put in there and buy and sell stocks for absolutely free. That's the best game in town. So I would recommend a Robinhood account for trading, and I'll put a link in the description of my referral link to Robinhood. And if you use that, I get a free stock and you get a free stock. And here's one of the free stocks that I got. And they're usually around $5. They'll give you a stock that's worth around $5. That's what I've had 3 free stocks from referrals, and they were all around $5. So you might get lucky and get something that's worth more than that, but so far I've not seen that. So I'd recommend Robinhood, and if you do decide to sign up, use my referral link, because it'll help us both out. And this is what I use for trading, and I use something different for investing. So I have my 401k is with Fidelity, so that is considered investing. But then I also have a different investing account, and this is M1 Finance. So I just got into this December 4th, And this is also, they do not charge any money for trades. But the thing is they only do one trade a day. It's automated. So things that you want to invest in long term, you really shouldn't be buying and selling multiple times a day anyway. You want to buy it, hold it, and this will automatically balance out your portfolio. So you could build all these different pies, they call them. And so like this is one that I got on the Seeking Alpha site. It's just like energy companies, gas, and they're actually doing pretty well. So you could just add individual stocks into a pie, and then you decide how much you want to invest in each pie. So like here I have these all equal weighted. But see, like here you can just select all, see equalize, and it makes them all equal. And confirm, which I'm not really making any changes, but yeah, so that one's earned. That one's done actually pretty good. And what else am I investing in? I have this defensive fund. It's a bunch of companies that tend to do well in like bearish markets. So this one did pretty well over the December time frame. And what is this? I have a international equity ETF. I have and you could add anything in here. You could add ETFs, bonds. I got some bonds in here, long-term bond, which those are really only good when like the stock market's not doing well. Bonds tend to do better. An intermediate bond, a long-term treasury bond, treasury ETF, and these are Vanguard. So some things Vanguard has better than Fidelity, and some things Fidelity has better than Vanguard. I like them both, but I mainly use Fidelity. Here I got some oil, gas, and coal, and some of these, if you go here into research, expert pies, they have their own, like you could own things that you can invest in. So here's like industries and sectors. And that's where I invested in like oil, gas, and coal. And you can see the performance. You can rank them by the performance over 1 year, 3 years, 5 years, and see how they've all done. So tech has been killing it the past 5 years. So these are things, it's a great tool for long-term investing, I think, because you can set it up to automatically, deposit into this account. And if something's underweight, like here, this one lost some money, it'll automatically put more money into that to bring it up to its to the target that you set for it, like 10%, and it's underweighted, so it would get funded, and it automatically balances everything out. And if it balances as you're funding it. If you want to rebalance it, you can click there, rebalance, and then it'll automatically sell things that are overweight and buy things that are underweight. So here I'll click it and give you an example. Come on, you could do it. And then here you have trades. So the next trade window will be on Monday. And I think they do it about an hour here, Monday, 9 a.m. So there it'll show what is going to be sold and what's going to be bought. So there could be hundreds or thousands of buying and selling of individual stocks, and it's all free. So imagine like if you're trying to do this on Fidelity and build a portfolio where they're charging you $4.95 for every single trade, and look at all these trades. Like imagine $4.95 for all of these a piece. Like, and you could buy fractional shares. So like, I can't do that on Fidelity. With this, you could buy, if you have $100, you can invest $100 into Amazon when the one share of Amazon costs, what is it now, like $1,500? Like, see, I have $804 invested in Amazon, which is less than what a single share is. See, a single share is $16.40, but I could still invest in Amazon, and the performance and the returns are the same as if I had a whole share. And judging by 37% return since I bought Amazon, it looks like I should have bought more Amazon. Because that's a great return. So, investing M1 Finance. And I'll put a link to this in the description to M1 Finance for investing. And I think this month, if you use my referral link, I will get $25 and you will get $25 for signing up for an account and funding it. And so M1 Finance is completely free. How they make money is if you decide to borrow money from them. They have low interest rates. I don't borrow any money. If you decide not to borrow any money, it's completely free. You don't have to. And I don't know. Oh, I don't want to actually borrow. Let's learn more about it. I want to see what their interest rate is because I don't even know. Oh, 4.25%. You can borrow 35% of your account balance at 4.25%. So at some points, that might be a good thing. Like if I would have borrowed 35% of my account balance and invested in Amazon for the past month, I would have had a 30-some% return, and I would only had to pay them 4.25%. So I guess there are some scenarios where it can make sense, but you never know how a stock is going to perform. Like my portfolio could have went down 15%, and then I still owe them 4.25%. So I don't know. I don't like to borrow money to invest in. That's my personal preference. What else? Here's some of the tech stocks I'm investing in over here. So instead of like buying the technology ETF, I'm just kind of cherry picking some stocks that I wanted to invest in. And then you could change them, you could edit, you could add a stock if you wanted in here. So I think this is a really cool platform for long-term investing. But I've been doing better trading myself. So I'm kind of more interested in trading. So since December 4th, I've returned 2.75%. And in the past week trading, I've returned 17.19%. So that has me thinking maybe I should just focus on trading as long as I can keep it in the positive, keep earning money and not losing it. And I guess in the future I could go more into like different trading tactics and things like that. One of the main things is setting up a stop loss or a stop limit. So a stop loss will tell, like when you buy a stock, say I buy the stock at, here we'll say, we can even say, all right, let's go through the day. So it started off at 41.32. I bought it 41.32. It's going up. So I want to set the lowest point where I don't want it to go below. So if I'm buying at 41 something, say like $40, I don't want it to go below $40. And then you'd set all your shares there, and then expires, usually good for today, or you could set it to good to canceled. So good to cancel, that'll go over several days. So as this goes up, you can raise your stop price. So after it's up to like 46 bucks here, I might want to cancel the original stop price I had, then raise this up to 45, so that now when I'm up here and then it drops off, well, it didn't get below 45, but if it dropped off below 45, it would automatically trigger your shares to sell, so that if they go down to like 30 bucks, you're not going to lose so much money. So that is what a stop is. And a stop loss will trigger it as a market order. It'll just say, get me out of stock right now. And a stop limit, you could set the minimum that you want it to sell at. So once the stop price is 45, and you could say that the limit that you want to sell is like 44, or you can make it even the same, that if it hits 45, you don't want to sell it for any less than 45. But that could be dangerous, because then it could fall so fast that it falls through the limit price and it might not sell. So stop loss, I think, is safer for getting out of stocks fast. And usually when I buy a stock, I'll buy it with a limit order, because you want to set a limit order will set the exact price that you want to pay for a stock. If you do like a market order, you're just telling them how many shares, and if the stock goes up or down in price real quick, you can end up paying more for a stock than you intended to pay. So I like to set the exact price that I'm going to pay for a stock before I buy it. All right, so what else can we talk about? There's another site that I track natural gas prices. I mean, there's so much into investing. It's hard to just roll it up and put a nice little bow on it, and now you know everything about trading, because there's so much to know that it just takes a lot of learning. So, let me see. They did have some, here's a learning center on Fidelity. This is another good resource. So they have a lot of videos and guides. Different tools. So like here, if you can go into trading, and then there's tons of, let's see how many videos that they have just on, here's a guide and different videos on different things on trading. So, I mean, there's a lot of stuff to learn. So here, like swing trading setups, that'd be something that I'm interested in. Just, there's a lot of stuff to know. So I just wanted to tell you like the basics, an overview, show you some tools that I use, StockTwits, investing.com. Sometimes I'll read news on Market Beat, Market Watch. This Seeking Alpha is another place where people will post like analysis, read news. And I mean, there's a lot to know. There's a lot to know in this stuff. So basically, I would say investing is the safest. I mean, the best thing to invest in is just an index fund. That's Warren Buffett's advice, and he's got a lot of money. So like Vanguard has an index fund, VOO, and that just tracks the S&P 500. And then there's Growth, VOOG. Those are kind of like growth stocks. There's another one. Which one was I investing in? The SPY-G. That's a growth. So that's like VOOG, except it has a lower expense. So S&P 500 growth. I invest in this one. If you just bought that and held it, like over the long term, look at that. Look at that. It's just going to go up and up and up. So if you bought it in 2008, it was $8. Now it's 33. So for long-term investment, you can just buy SPY-G here and keep putting money into it for 30 years. And it's going to be almost guaranteed to be higher. Like in the short term, you can't really guarantee it. Like someone here might have bought it April 18th, 2008 for $14. And then in December 19th, 2008, it was only worth $9. So there are ups and downs in the market, but over a long term, the market is almost always going to be higher in 10 years than it was 10 years before. So that's something to think about. Let me know if you have any specific questions in the comments. Maybe I can make some more videos in the future. This is something else I was looking at, trading futures. You don't even want to get into that. Futures and options. I haven't ventured there yet. So I didn't really want to get into that yet. I'm enjoying trading like this stuff right now. It's been doing pretty well. So that's all I got for now. I hope this is helpful. I mean, it's a lot of information to digest. Simplest thing would just be to invest in your 401k at work and put it into, you know, just an index fund, low cost index fund like SPY-G here. And other than that, you got a lot of stuff to learn on your own too. I can't teach you everything. These are just some of the things that I use. You can go check them out yourself. If you got any questions, let me know. But that's all I got for now. Hope I taught you something at least, or at least some place to go. You can go check out the links in the description for the links to Robinhood and M1 Finance, and I'll get hooked up if you use my referral links, and you'll get something out of it too. So that's cool. All right. Well, hope you enjoy this. I'll talk to you later. Take it.